Is Curve Finance about to tank? Will the Curve founder be liquidated? And is Sam Bankman-Fried behind the recent bald token rug pull? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin fell below $28,700 last night and seems to be losing steam as the new month starts. With all the FUD happening in the DeFi world, I could see us going to 28K and potentially 26.5 as well. U.S. Presidential Candidate Ron DeSantis says Biden's war on Bitcoin and cryptocurrency will come to an end when I become president.
In Florida, we've seen them talking about it, so I actually signed legislation where we don't recognize central bank digital currency. Now, Congress could override us on that, but the Fed unilaterally, I don't think they could override us on that, so we've protected Floridians. But as president, on day one, CBDC goes into the trash can. We're not going to allow it. And we are going to let Americans invest in things like Bitcoin and cryptocurrency. No one's forcing you to do it. If you want to do it, you can do it. Biden's war on Bitcoin and cryptocurrency will come to an end when I become president.
The United States Securities and Exchange Commission sued internet marketer Richard Hart and his project HEX, Pulsechain, and PulseX, alleging he raised over $1 billion across 3 different unregistered securities since 2019. The lawsuit said Hart continually touted these investments as a pathway for grandiose wealth for investors, claiming that HEX, for example, was built to be the highest appreciating asset that's ever existed in the history of man. Although Hart claimed these investments were for the vague purpose of supporting free speech, he did not disclose that he used millions of dollars of Pulsechain investor funds to buy luxury goods for himself. The SEC said Hart knew his often tongue-in-cheek disclaimers that offerings were not securities were false, including when he said HEX was capable of 38% annual returns. He was also accused of spending Pulsechain investor funds on a McLaren and a Ferrari, 4 Rolex watches costing over $3 million, and the Enigma, a 555-carat black diamond costing $4.28 million at Sotheby's auction in February 2022. Richard Hart is a 43-year-old U.S. citizen believed to live in Helsinki, Finland. PulseX and Pulsechain launched earlier this month, but faced rocky starts in the weeks immediately after going live, seeing high fees, liquidity issues, and exploitable bugs. The prices of HEX, Pulse, and PulseX tokens fell post-launch. The SEC further alleged that he made frequent references to federal securities laws, citing his YouTube live streams and other public statements. However, the suit said Hart admitted himself that the success of these endeavors were completely dependent on his efforts. Richard Hart pumped HEX's capacity for investment gains, claiming that Hex.com is designed to surpass ETH, which did a 10,000x in price in 2.5 years. The lawsuit added that on December 2nd, 2019, during a 7-hour live stream on YouTube hours before the HEX offering commenced, Hart stated that HEX was built to outperform Ethereum and Bitcoin and all other cryptocurrencies. The lawsuit charges Hart and these projects with fraud and securities registration violations. With no recent response to the SEC, there is a video of Richard Hart calling them out prior to this, which has resurfaced.
Any of you guys from the SEC are listening, I hope you are. I want you to know in the deepest parts of your heart that I've saved a lot more people from being wrecked than you have. Because I did everything I could to prevent people from putting their money into BlockFi. Did you? I did everything I could to prevent people from putting their money into Celsius. Did you? I did everything I could to put people in charge of their own keys and get them to have self-custody. Did you do that? I called the top on the day. Did you? What have you done?
The Sophiaverse is an NFT and game-based marketplace for integrating games into the metaverse, essentially a gaming platform supported by AI technology that seeks to enable human interaction with superintelligence facilitated by the Soph utility token. Simply put, the Sophiaverse is like a whole game where you can teach Sophia, learn from her, and even monetize your data through NFTs. Imagine having your own unique Sophia AI companion that you can customize and train based on your preferences. And the best part is you can trade and sell your Sophia's traits to others. We've just posted a full video breakdown on the Sophiaverse, which we'll put in the description below. Curve founder Michael Egorov currently has a $100 million loan backed by 427.5 million Curve, or about 47% of the entire Curve circulating supply. With the Curve token down 10% over the past 24 hours, the health of Curve is in jeopardy. On Aave, Egorov has $305 million of Curve backing a $63.2 million USDT loan. At a liquidation threshold of 55%, his position is eligible for liquidation at 37 cents. This would only require a 33% drop in Curve price for this to occur. He's also paying 4% APY for this loan. And on Frax Finance, Egorov currently has 59 million Curve tokens applied against 15.8 million Frax of debt. Although this is much less Curve collateral and stablecoin debt than his Aave position, in my opinion, it poses a larger risk to Curve due to Fraxlend's time-weighted variable interest rate. At a 100% utilization rate, which is almost at, the interest rate will double every 12 hours. The current interest rate is 81.2%, but it can be expected to increase to the maximum of nearly 10,000 APY after just 3.5 days. That's an astronomical interest rate and could lead to his eventual liquidation regardless of the curve price. At a maximum loan to value of 75%, his position's liquidation price could reach 51 cents within 4.5 days, which is less than a 10% decrease from the current prices. Yurov has attempted to lower his debt and the utilization rate twice, repaying a total of 4 million fracks over the past 24 hours. However, the market's utilization rate remains at 100% as users rush to remove liquidity as soon as he repays. With such large positions at risk, they pose serious concerns to the curve price, considering the low amount of liquidity that exists, and the position sizes that are at risk of liquidation are in the 8-figure range. Thus, the curve price could potentially tank to extreme lows, causing knock-on effects over a large part of the DeFi ecosystem. Today, Igorov deployed a new curve pool, a two-pool consisting of Curve USD and FraxLens CRV Frax LP token, seeded with 100,000 of Curve rewards. The Curve Frax LP is the same liquidity that he is borrowing from FraxLend and poses a larger risk to his potential liquidation. This is an attempt to incentivize liquidity towards the lending market in order to lower utilization rates and decrease the risk of his debt spiraling out of control. 4 hours after the launch, the pool has attracted $2 million in liquidity and decreased the utilization rate to 89%. Now, I think DeFi is amazing. The one major flaw, I believe, is that you can see huge project founders loan and liquidation positions on chain, resulting in people always trying to take them down for financial gain. In my opinion, Igorov won't be liquidated as he'll get help from other people in the crypto space like Justin Sun, who just tweeted, "Excited to assist Curve. As steadfast partners, we remain committed to providing support whenever needed. Our joint efforts will introduce an ST USDT pool on Curve, amplifying user benefits." And then also this morning, Justin Sun bought 5 million Curve OTC at an average price of 40 cents. What will most likely happen, in my opinion, is everyone tries to short Curve and get short squeezed by some big traders, and with that new liquidity, the Curve founder is able to sell more Curve and repay his loan. In my experience, it's too late to start shorting when you see the big crypto influencers on Twitter start writing threads. Defunct crypto exchange FTX has proposed to organize its creditors into different classes of claimants and has provided a pathway for one class of its claimants to restart the FTX exchange with third-party investors should the group agree to it. The filing, which was posted on Monday night, delineates the claimants into various groups. The first group of claimants is FTX.com offshore exchange, which it calls .com customers. Nexus customers of US exchange, US customers. The priority of these claims will be determined according to the waterfall priorities, and each class would get a pro rata payout in what's left of the pool after the preceding class is finished. The specific order of payout is determined following negotiations with stakeholders. Members of the .com claimants category, former customers of FTX.com, may opt to pool their assets to create what it calls an offshore exchange company or a rebooted platform not available in the US. Rather than all cash, the debtors may determine that the offshore exchange company remit non-cash consideration to the .com customer pool in the form of equity securities. All this is basically suggesting that the debtors could forego a cash payout for a stake in the new exchange. In other FTX and Sam Bankman-Fried news, the rugpull of a short-lived, heavily hyped meme coin called Bald has a whole cast of characters, but is one of them Sam Bankman-Fried. On-chain data suggests interactions between the meme coin Bald's deployer contract and one of the wallets tagged by Nansen as belonging to Alameda Research, the trading company founded and controlled by Sam Bankman-Fried. Over the weekend, the lure of meme coin fortunes in a starved market helped Coinbase's new Layer 2 blockchain Base attract some $68 million in Ether and over $200 million in trading volume. Traders flocked to purchase the Bald token, which jumped to an $85 million market cap late on Sunday, with some traders like Cheatcoiner who invested $500 to make over $1.5 million in a 24-hour time period. On Monday, the Bald token deployers started to remove millions of dollars in liquidity from the token's trading pairs in a sudden and unannounced move. This left thousands of holders in the lurch and caused prices to plunge as much as 90% as holders made a run for the exits. All of this drama occurred with one caveat: the Base blockchain isn't even officially open to the public yet, with a proper launch expected later this year. However, degens will always find a way to get in early on a new meme coin. Wintermute's head of research Igor tied another wallet address to Alameda, stating its owner showed strong technical capabilities and proved to be a savvy DeFi user, trading on the first version of DYDX and Oasis, as well as voting on the first proposals from SushiSwap. The wallet was seemingly active on crypto exchanges Binance, FTX, and Coinbase in that period, and was a heavy DeFi user, farming millions of dollars from early DeFi projects such as Yearn Finance and Cream. Igor added this address also was associated with the wallet as an ex-top trader on DYDX version 3. Again, very few people are capable of this. However, Igor stated that while the actions seemed to be definitely someone from Alameda, it was unlikely to be Bankman-Fried himself. Also, how could Sam Bankman-Fried transfer $40 million through Coinbase right now? It's unlikely that you can get by with a fake KYC without a source of funds. So now, while the on-chain evidence is skewed towards suggesting that the Alameda-controlled wallet has interacted with the wallet used as a contract deployer, it's highly unlikely that Sam Bankman-Fried is behind it. As part of his bail conditions, Bankman-Fried's access to the internet is heavily controlled and restricted to a selection of news, sports, and educational websites. But what do you guys think? Did Sam do this, or was it someone close to him at FTX, or someone completely unrelated? Let me know what you guys think in the comments down below. That's it for Altcoin Buzz News Update. I'm Cody Buffington. Thanks for watching.